Welcome to 360 Money Matters, where financial planners Billy and Andrew talk all things financial planning. This podcast aims to increase your knowledge and confidence with all things money. Each week, they will cover topics like wealth creation strategies, investment principles, creating passive income, paying off your debt faster, and much, much more, so you can live a life on your terms without limits.
Hello and welcome back to another episode of the 360 Money Matters podcast. I'm Billy and I'm joined by my co-host,
Andrew. Bills, here we are back again, back on for another 360 Money Matters podcast.
This is it, Andrew, on a cold winter's day. I'm channeling the North Face over here.
It's meant to be autumn.
It is cold though, right?
Definitely cold. Definitely cold.
It's just getting us used to it, the Melbourne weather,
exactly
right?
Exactly
So
right.
all rugged up in my my puffer jacket. And
We're all
top.
rugged up in jumpers and jackets here in rainy and cold Melbourne.
Alrighty, so Andrew, what have we got on the agenda for everybody today?
Yeah, so today we are back with another market wrap. So our monthly segment, we're talking about all things financial markets, and we are looking both in Australia and across the globe.
Excellent. Well said. With such enthusiasm.
Exactly right.
All right. So we should probably start with the Fed. I
Yeah.
think that's probably the best place to start, just because they seem to lead the charge with most things finance related. What did the Fed do recently, Andrew?
Yeah, so semi-recently, but it's been, a little bit, almost a month or so, but the Fed raised rates to 0.25, the Fed raised rates by 0.25 basis points in their last meeting.
Mm-hmm.
They're meeting again in another couple of weeks, so they're meeting again on the 4th of May. And market expectations is that they're probably going to hold rates this time round. A little bit interesting when they did raise rates, sort of given the SVB or the Silicon Valley Bank collapse. There was some talk about them potentially keeping rates on hold, but they rose rates and they're expecting to keep it where it is for the next decision.
So for all those Star Wars fans out there, in case you didn't catch that, may the 4th be with you. Can't help myself.
Can't help yourself. I didn't even think about that one. Didn't cross my mind, but I'm glad that you brought it up, Bills.
When I was going down that direction, I saw Andrew look at me and he's like, "What the hell? This isn't on the agenda. This isn't on the script."
You had a smile on your face.
What are you talking about?
I was like, did I say something wrong? Are we going to have to pause the podcast and rework that? But no, just wanted Billy's words of wisdom.
That's it, exactly right. Now we need to interject a little bit of fun and a little bit of humour into this. Andrew, the S&P 500.
Yeah, I mean, look, it's been up 7%, so we're talking about the largest 500 companies, and up 7% since its March 13 low. And the reason we're kind of sitting in the day that at March 13th is that's the SVB bank collapse. So we saw markets sort of drop thereafter as a result of it. So using that as kind of the bottom of this particular segment of the market, and really had a strong rally ever since of 7% up.
Yeah, and I guess look, that's a really good time frame to start with. But in terms of the rally, what we've seen, I mean, that's a significant increase in a month. The prospect of inflation starting to come under control, I mean, that's one of the primary drivers for the increase and for the confidence that we're seeing in the market. And also in terms of the economy, and we're still talking from a US perspective here, but from an economic point of view, employment and the economy is still holding up quite well. So there's still a lot of things to be positive and optimistic about. I guess the picture that it's painting is that we're having our cake and we're eating it too, if that makes sense. We're getting on top of inflation, yet the economy and employment is still buoyant.
Yeah. In addition to that, also some talk of, rates remaining on hold provides a lot more certainty for purchases over in the US and the property market as a result of it as well. So all things considered, I mean, look, all of these things, you never know whether it's just a blip and whether the market can turn in another direction very quickly. But it does point to some more positive signs than what we have seen in the past, which is why we've really seen markets rally as a result of it.
Yeah, and you know what? Maybe it is the soft landing that economists and central banks talk about, right?
Yeah, well, they've maybe talked it into existence. What do they say? As long as if you want something hard enough, then you just talk it into existence. Maybe all the economists have done their magic for us.
They've manifested it. That's
Exactly
the word I was
right.
thinking of. They've manifested a soft landing. So we'll see how that one plays out. But look, yeah, that's exactly why we've seen markets, I guess, rally the way that we have. So probably something a little bit closer to home that everybody knows and loves, the property market.
Yeah, Bills, tell us what's happening in the property market.
So I guess firstly, the rental market is still booming.
Yeah.
I can't find another word to describe what we're experiencing here in Australia, and obviously different markets are responding and acting differently. But essentially there doesn't seem to be enough rental properties available for the people that want to rent those. And as a consequence, what we are seeing is that the price of a rental is being pushed up quite significantly. And, you know, you see it on the news, in the newspaper, in the media, open for inspections. There's a line deep of obviously, you know, obviously it depends on which property, and more properties are in demand than the others. But what we're seeing, there's lines literally down the street with a lot of properties, and we're hearing some stories around rent being advertised at a certain price and then somebody just outbidding the next person and really pushing those up from that perspective. So yeah, rents are actually really booming in Australia.
Yeah, and look, there's kind of a few things all kind of working towards rental prices increasing. I mean, you consider that been very little stock on the market from a purchasing perspective. Yep. So buyers have had less options, which potentially pushes them into, you know, renting a lifestyle asset that they're wanting to achieve. Investors, they're paying significantly more from an interest rate perspective, and so they're, you know, wanting to pass some of that cost on, obviously, to people that are tenanting those properties. In addition to that, you know, really there's been signs that the immigration in Australia is going to be coming back stronger than what was expected, and so as a result of it, you also see rental prices continue to get pushed up further, and so there's putting a lot of pressure on the rental market as a result of it.
Yeah, and that's a really interesting one around migration, because I guess when you open up your borders and you're trying to grow the amount of people that are coming into a country, it's a lot easier to do that. You just change your policy and attract the right people and away they come, as opposed to, you know, building up the infrastructure to house these people. So that's going to be really interesting how that plays out. And I think we're going to continue to see pressure from a rental perspective for quite some time to come, because we can't just build houses just like that. It'd be nice if we could, but that's not how it works.
Yeah, exactly right. Exactly right.
Clearance rates with property have remained stable as well too. So we've been seeing that average around 70%.
Yep.
So that's been really positive. And I think you hit the nail on the head before, where you're talking about just less stock on the market. So that then has translated to property prices as well too. And we've started to see a turn now in terms of price increase in both Melbourne and Sydney recorded price increases last month.
Yeah.
So whether or not we've now seen that turning a corner as well, or if it is just the fact that there is less stock on the market, there are some people that can't get rentals that are in a position to purchase. Maybe they want to get in. Maybe there's a bit more competition from the people that are willing to buy rather than the sellers that are willing to sell, and that's bidding the price up. But from a property price perspective, we've seen some positive signs from that perspective as well too.
Yeah, absolutely. The other thing that was massive news in Australia, because it's been almost a year since this has happened, but the RBA decided to keep rates on hold. So we didn't see a rising rates. We didn't see mortgage holders have to fork out more money. We actually saw rates staying on hold, which was more or less expected, but still one of those things that, you don't quite see it coming, because it's, has been a long while in between drinks.
Yeah, and it's good to see. I mean, look, it's, as a mortgage holder myself personally, month in, month out for almost a year. What was it, 11 months?
Yeah. 10 or 11.
10 or 11. Or the 11th one was when they decided to not move. Probably should have checked that.
Yeah, we probably should have checked it before we jumped on the podcast, but we'll say that it's 10 or 11 because we're not sure whether you include the month of January, whether they, because they don't meet in January, so we're going to use that as our caveat.
Nice little caveat and nice little save, Andrew. Well done. And
we're both right.
Next time, make sure you put the notes together correctly.
I'm just glad that you finally disclosed to all of our listeners and viewers who does the hard work and heavy lifting on putting our show notes together.
Doesn't count if it's wrong. So this one's really interesting as well too, from a mortgage holder's perspective, because it is the first time in a long time that there has been a break. So that's a really positive step for mortgage holders, thinking that, well, really two things from my perspective. Are we getting to the end of the cycle? I think it's way too early to call that, but maybe that's sort of some of the stuff that people are thinking about. But probably the more positive thing that I think this indicates is that the Reserve Bank is using the data and making relevant and timely decisions on the data that they receive. So if the data tells them that, hey, we're heading in the right direction, we're starting to get on top of inflation, there's no need to continue pushing the interest rates up, they'll pause.
Yeah.
So if that's the case, and we keep doing the right things and getting on top of inflation and reducing the cost of everything going up, then hopefully that then translates to not only this pause in interest rate increases for a period of time, but maybe it even gets to a stage at some point in time where the other side of the coin is accurate as well too, and maybe they start tweaking it down as well when the timing's right. Now, I'm not suggesting that we're anywhere near that. All I want to do is highlight and say the Reserve Bank seem to be using the data to help them make and drive those decisions. And I think that's a really positive step in the right direction.
Yeah, and look, we've you can see it in the minutes. So, the minutes and the statement that they're releasing really is stating the fact that we're looking at the data and we're understanding and acknowledging the fact that it is a lagging indicator. So you raise rates today doesn't mean that inflation is going to drop tomorrow. So they reflected on that fact and they recognised that, hey, we probably need to wait for some of this to flow into the market before we action it further. Big call out in that though is the minutes and the notes still reflect that they are adamant and keen on keeping inflation at the target, 2 to 3%, and they will take whatever measures are necessary. So it doesn't mean that mortgage holders are in the clear just yet, just because we've had 1 month where there hasn't been a raise in rates. It doesn't mean that that's not going to happen in the future. They're still adamant and still really focused on bringing inflation down to really that target rate.
Yeah, and I think that disclaimer is always going to be there, especially after the Reserve Bank governor said that, we're not going to see rates increase to 2024.
Yeah.
That's kind of like, hang on, the disclaimer's always been written there. I think that's just going to be a permanent feature of the minutes of the Reserve Bank. But anyway, I digress. The ASX 300, so top 300 companies listed on the stock exchange. So from mid-March to mid-April, we are talking a month's time frame from now, or a month back from now. What did we see, Andrew? 6.98% up.
Yeah.
So really similar to the experience in the US.
Yeah, and look, it kind of highlights a couple of things. One, the positive sentiment, not necessarily the positive sentiment, but the more positive sentiment that markets have been experiencing really over the course of the last month. There is some, talk that inflation may have peaked, interest rate rises may have peaked. In addition to that, following lockstep with what's happening in the US as well, markets have rallied as a result of it.
Yep. Mining sector, specifically in relation to China and China opening up again.
Yeah, mining sector was doing, or has been, quite positive over the last month. We've had some good news come out of China in relation to their inflation data. Obviously, lockdown as well is also contributing to that. So they're no longer chasing that COVID zero policy. I think another kind of key takeaway out of all of this is one of the things that I always really try to profess, and we always really try to profess to all of our clients, is you don't want to base your investment decisions off fear, and at the same time, you also don't want to base it off greed. And so what we saw over the course of, or really about a month ago, was investment markets really be pushed into a tailspin. SVB bank collapse. We also saw, obviously, Credit Suisse and UBS. So concerns around the banking sector, investment markets taking a really big tumble. So a lot of concerns for investors out there. But in the month directly afterwards, we're now seeing massive rises in equity prices. And so making decisions based off fear, making decisions too rashly can mean that you miss some of the best times in investment markets. And so consider long-term, consider your long-term objectives, consider that you're not overcommitting 100%, but make sure that you're also not making investment decisions off fear and potentially missing out on some of the best market gains that you could have made.
Yeah, and I guess the way that we refer to that sort of from a financial advice perspective is the difference between not trying to time the market, but having time in the market.
Yep.
It's impossible to be able to pick the highs and the lows consistently anyway. And from our perspective, we talk about long-term investments, we talk about dollar cost averaging, we talk about investing, I guess, lump sums when the markets are down, because you do recognise that it's going to represent a buying opportunity. But yeah, well said, Andrew, because I think that's worth pointing out and noting, especially because of what we've seen recently with SVB and the recent market rally as well too. Yeah. And while we're on, I guess, SVB, we are seeing that the banking sector has at least mellowed a little bit in terms of what was happening. There was some talk of contagion there for quite some time. Obviously, Credit Suisse ran into trouble. UBS came in and sorted that out. We did see a few regional banks in the US collapse as well too. And there was some talk about contagion and what that's going to look like, and is it going to spread to the banking sector? Those concerns seem to have been alleviated now. There's not really a lot of noise or anything in the media from that perspective, so it seems like where it's at is where it's going to stay, from what I can tell anyway.
Yeah. Looks like there's a little bit more stability in that sector, which hasn't been rocked for a long period of time, but looks like prices are starting to stabilise there.
Mm-hmm. Unemployment in Australia.
Yeah, I mean, unemployment stayed at 3.5%. So really, it even though that we are seeing some redundancies start to flow through on the market, it looks like new job creation is still there. Demand for employees is still there, and as a result, unemployment remained at 3.5%, which was it a 50-year low, or was it almost a 50-year low?
Almost a 50-year low, yeah. Yep. I don't actually know what that number is, but I reckon we'd be getting close to it.
Yeah. No, absolutely. Once again, not prepared enough for the podcast.
And that's actually a really good conduit, because I can't read your next dot point. So Andrew, I might throw over to you in terms of inflation and what that actually means. So we've got some numbers there around some inflation and stuff.
So the last time that we jumped on the podcast, inflation was at 6.8%. It's we haven't actually had any official inflation data, so we're still at 6.8% from an inflation perspective. However, the market's pricing in the fact that that they think that we've reached the peak of inflation, that things may be starting to return to normality, which is really what's been one of the main drivers and catalysts for the volatility we've seen over the last 12 months or so.
Yep. So what we're talking potentially that inflation could have peaked, and we're starting to see, the light at the end of the tunnel, so to speak. Things are starting to return back to some form of normality, which is the reason why we've seen the investment markets, I guess, rally over the last month.
Yeah, exactly right. Obviously, some positive or some more positive news around Australia and around the world than what we've seen in the past. Mm-hmm. Key thing to note is, just because we're seeing positive news doesn't mean that's necessarily going to continue. It only takes couple of sets of bad data for that to throw markets into more volatility. So don't get overexcited, don't overcommit. It's always important to consider your long-term objectives when you're investing, when you're putting money into markets, and make sure that it's the right timing for your circumstances.
Good plug to get advice and go and see a financial advisor, I reckon.
Wasn't where I was going, but I'm glad you took it there.
Andrew, I think we did some justice on that one. Hopefully we got some information across to our listeners and our viewers just in terms of market wrap and where things are sitting at the moment.
Yeah, absolutely. And the next time that we do a market wrap, Billy's going to wrap the entire segment. That's why the name was always Market Wrap.
Did not know about that, but there you go. So to our listeners and our viewers, thank you for your time. If you've got any questions or you need any further information, reach out. Our details are in the show notes. Make sure you
like and subscribe to the podcast. Hopefully you got a good bit of value out of this one, and we look forward to catching you next week.
Cheers.
Thanks for listening today. If you have any questions on what we talked about or would like to have a chat about your money journey, visit us at 360fs.com.au.
Just a reminder to our listeners that the information contained in this podcast is general in nature and it is not intended as personal recommendations for the audience. Please consider whether the information suits your circumstances before acting on it. This information is provided by Billy Amaritis and Andrew Nicolaou of 360 Financial Strategists Proprietary Limited, authorised representatives and credit representatives of AMP Financial Planning.